If you wanted to know what the outlook for the semiconductor industry would be in 2024, I present to you Taiwan Semiconductor Manufacturing Company Limited's earnings, otherwise known as TSM or TSMC. We will jump into these earnings, these results, the all-important guidance, jump into the financials, which is a bit daunting over at TSM. We'll break those down for you and jump into the technical charts as always. If you are new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. It would be much appreciated. Shares of TSM rocketing higher nearly 10% on the back of their Q4 results. We'll jump into those. Over the past 1 year, this stock is up over 26%. That does include today's gains of nearly 9.5%, close to 10%. Now, TSM did beat on their Q4 top and bottom lines, and they also came in with spectacular guidance. But firstly, on their top line, $19.62 billion worth of revenues. That was a decline year over year. And basically, as we go through these earnings, the story over at TSM is year over year, this company's earnings don't look that great. Quarter over quarter, though, that is another story, paints a fantastic picture and kind of really paints the tide is turning over at TSM, and the guidance is supposed to look fantastic over the next 1 to 2 years. And that is really why I think the stock was rewarded. Now, that was a beat of roughly $50 million on that top line. So not a huge beat, but did come in with that small beat. And then Q4 GAAP EPS coming in at $1.44. That again was a beat of nearly 5 cents. In the fourth quarter, shipments of their 3 nanometer accounted for nearly 15% of total revenues, and then 5 nanometers accounted for 35%. We'll jump into their revenue breakdown from the different chips that they have, and that paints a really spectacular story over at TSM. But before that, guidance over at this company was also absolutely stellar, as they now expect full year 2024 revenue to grow in the low to mid 20% range. That is in US dollar terms. And more specifically, for the first quarter of 2024, TSM expects revenue to come in between $18 billion to $18.8 billion. Consensus revenue estimates for the first quarter were closer to $18.23 billion. So their midpoint at 18.4, coming in roughly $200 million higher than the average Wall Street consensus. Now, TSM does expect 2024 to be a growth year for the company, supported by a continued strong ramp up of the industry-leading 3 nanometer technology and continued strong demand for their 5 nanometer technology, and of course, robust AI demand. Now, in terms of earnings growth and revenue growth over at this company, looking fantastic, as 2024, they're expected to grow their earnings by close to 21.5%. In 2025, again, expected to post another 20+% growth year. And then same thing on that revenue side, expected to post nearly 21.2% revenue growth for the full year. Now, keep in mind, Taiwan just guided for revenue growth in the range of low to mid 20%. So certainly if they are able to come closer to 24-25%, this revenue figure will likely be closer to 85, even slightly north of $85 billion. And that certainly proves well for their operating margins, gross margins, and of course, net income margins. Now, jumping over to their statement of income, we saw that $19.62 billion worth of net revenue. Keep in mind, this is in US dollars. They also post in Taiwanese dollars. We'll try to keep this to their US figures. The guidance for this previous quarter was somewhere between 18.8 to 19.6 billion, and they came in right at the top end of that at 19.62 billion. Now, keep in mind, like we said, quarter over quarter, that was fantastic growth of nearly 13.6%. Year over year did see a decline though, and I think that is the story over at TSM, that 2023 proved to be a challenging year, and now especially as they were comping over those 2022 results, those numbers were difficult to come in and beat in 2023. But for 2024, that is where they expect, again, those stellar revenue and earnings growth estimates. And I think that will help TSM drive greater margin and net profit expansion over the subsequent few quarters. We see gross margins coming in at 53%. That is still stellar, absolutely fantastic gross margins for this kind of business that is very capital intensive. 53% gross margins are absolutely fantastic. That was still a decline of nearly 9.2 percentage points from a year ago. So normally you can see this gross margins number closer to a 60%, and that is likely where TSM is headed over the next 4 quarters, closer to a 60% on their gross margin line. Operating margins, again, 42%, still very fantastic. Just from this difference, you can see they spend nearly 10% of their net revenues on operating expenses. So certainly that is not a huge amount. Very efficient and cost-controlled business over at TSM. Again, these operating margins down roughly 10.4 percentage points. Likely over the next year, you can see this number climb back up higher, closer to 50% in my opinion. And then similar story over at your net profit margins. right now sitting at 38.2%, which represented a decline of roughly 9 percentage points year over year. But you see quarter over quarter, not nearly as big of a decline. And so those gross margins, operating margins, and net profit margins, I expect those to get better really over the next 4 quarters as your earnings continue to grow in that roughly 20% range. Now, in terms of their fourth quarter revenue by technology, you see the 3 nanometer chip makes up roughly 15% of their revenues in this previous fourth quarter. You jump back to Q2 of just this previous year and you were basically making no money from this 3 nanometer technology. Now that revenue mix has jumped closer to 15%. So that is fantastic to see. This company is seeing an absolute boom in their demand of 3 nanometer chips and of course their 5 nanometer chips. These two chips make up exactly 50% of their revenues over in the fourth quarter. And then continued steady demand from a 7 nanometer chip. And really over the next few quarters, I think you can expect this product mix to include more revenues as a percentage from this 3 nanometer chip and maybe slightly less from all your larger ones. But again, just how fast they're able to scale their revenues on this 3 nanometer chip, certainly a good sign over at TSM. Now, moving on to their balance sheet, looks a little bit daunting. You have a ton of columns. The left-hand most side is in USD, and that is really what we'll be looking at. This is for the last 3 months ended December 30th, sitting on nearly $47.6 billion worth of cash and cash equivalents, total current assets coming in at $71.3 billion year over year. That was an increase of roughly 7%, quarter over quarter, jump of roughly 5%. The important thing on this current assets is also inventories. This is a company that likely you don't want to see inventories tick up all too much. Year over year, that did jump roughly 13.5%. I think that is a reasonable increase, especially considering they're expected to enter a period of extremely high demand, especially on that AI side. Stocking up on some inventory, not necessarily a bad thing in my opinion over at TSM. Certainly 13.5% jump year over year, not an overly concerning number. Now, in terms of non-current assets, property and plant equipment coming at nearly $100 billion. This is a company that basically builds foundries and has to invest a ton into their property, plant, and equipment. And certainly if this number was to go down in a significant way, I would be more concerned with that. But year over year, this did jump roughly 13.8%. Certainly I do like to see that. They have, I think, 2 plants over in Arizona, with the second one expected to go live sometime in 2027 or 2028. And then they have their plant over in Japan as well. And so majority of TSM's assets tied into their property, plant, equipment, and then cash and cash equivalents. That brings their total assets at just under $180 billion. Keep in mind, this is a company at a $476 billion market cap. Not sure if that's updated from today, but sub $500 billion market cap, sitting at over a close to $180 billion in total assets. In terms of total liabilities, not a ton, roughly $66 billion of total liabilities. Out of that, $30 billion are your current liabilities, and then another $37 billion in non-current liabilities. And so from a current assets to liabilities perspective, this company is looking very healthy on their balance sheet, have a ton of cash, and then again, a ton of property, plant, and equipment, which in my opinion is not easy to build out. Certainly you have companies like an Intel looking to build out foundries, and this takes a long time, takes a lot of regulations, and of course takes a lot of money. And so on its face value, this property, plant, and equipment probably can deserve some sort of premium in the market, considering how important these foundries are to not just TSM, but the overall chip industry as a whole. Now moving on to their statement of income, as we saw, $19.6 billion worth of total revenue year over year was basically flat to down just a little bit. Now, your cost of revenue is coming in at $9.2 billion, which leaves your gross profits at roughly $10.4 billion. Again, a tale of two stories. Quarter over quarter, that was a substantial increase, close to 12%, but year over year, a decline of nearly 15% on those gross profits, again, on those income from operations at nearly $8.1 billion. Keep in mind, these are still fantastic cost measures over at TSM, as they have just $2.2 billion worth of operating expenses, and so are able to still generate over $8 billion of income from operations from $19.6 billion worth of net revenues. And then your net income all the way coming down at roughly we'll call it $7.5 billion. Again, quarter over quarter, an increase of 13%. Year over year, they did decline roughly 20%. And so with Taiwan Semiconductor expecting growth of roughly mid-20s to 20% over the next, we'll call it 4 quarters on their revenue side, I think that will allow their revenues and really earnings and margins to kind of normalize back to those 2022 fourth quarter levels, where they were far higher. And then as this company heads into 2025, that is when we can expect those revenues to again climb back closer to $100 billion, representing another 20% worth of growth. And I think that is really what investors are excited about over at TSM, continued growth both on their top and bottom lines. For their full year 2023, we came in at revenues of roughly $69.3 billion. Again, next year this year in 2024, we're expected to have revenues of roughly $83 billion and then $99 billion in 2025. So that would be a substantial ramp from just $70 billion in 2023. We subtract off roughly $31.6 billion worth of cost of revenues, leading to gross profits of $37.6 billion. Not a ton of operating expenses, just $8.1 billion worth of operating expenses on $37.6 billion worth of gross profit. This is actually what has me the most excited over at TSM, just the fact that they're spending only $5.8 billion, and I say only $5.8 billion in R&D for a company that's really at the forefront of developing nanometer technology, and with a company that developed a 3 nanometer technology that has scaled revenues pretty rapidly. Just spending $5.8 billion in R&D for a full year and then another $2.2 billion in SG&A. That is certainly very effective operating practices over at TSM. I think a lot of companies on Wall Street should really analyze how exactly they do this and really try to mimic it. I think that would prove well for their stocks. Now, from an income from operations coming in at roughly $29.5 billion, and then your net income at $26.8 billion for the full year. In terms of cash flows, everything looking very good over at TSM. We have that roughly $31.4 billion of income before income tax we pull down from their statement of income. This is again for the full year 2023. We get to add back a ton of non-cash expenses like depreciation and amortization. Like we saw, roughly $100 billion worth of property, plant, and equipment. That will certainly cause a lot of depreciation to be added back onto their cash flows. And so we generate roughly close to $40 billion worth of operating cash flows for the full year. In terms of investing activities, we put back roughly $30.5 billion again into property, plant, and equipment, have to continue to invest in those foundries, very capital intensive business over at TSM. And so we used up roughly $29 billion in our investing activities and then paid off roughly $9.3 billion in dividends. And so from our $39.8 billion of operating cash flows, roughly $30 billion is used for our property, plant, and equipment, and then the other $9 and $9.5 billion used towards dividends. This company does pay you roughly 1.8% on a per share annualized basis. And so $9.3 billion worth of dividends, and then the rest of their bond issuance for a little bit of debt basically goes on to their cash and cash equivalents, which are now sitting at close to $47 billion. So again, from a cash flow perspective, very shareholder friendly. You basically see all of your operating cash flows either invested back into the business in terms of property, plant, and equipment, or returned to you as the shareholder in terms of dividends or a small buyback, or the rest is just then added to the cash pile over at TSM. Again, very shareholder friendly from a balance sheet, from a cash flow perspective. And then as the statement of income continues to get better throughout 2024, I think this company is really in a very good position and kind of paints a very bright picture for the whole industry in 2024. You have companies like Nvidia, like AMD, using chips from TSM. And certainly if TSM's revenues are expected to climb, those companies are likely going to see expansion and their revenues, earnings from a higher demand, especially on that AI side. Now, moving on to the technicals, this company has been basically locked in an uptrend dating all the way back to October of 2022, was bottomed out close to $60 a share. Since then has been locked in this uptrending channel of lower highs and lower lows, right now trading closer to the upper end of that range at just around $113 a share. It did break a key level of resistance at roughly, we'll call it $105 a share, which was the previous set of highs we made back in June of 2023. Now it is coming right around the consolidation range it was in basically for, we'll call it a full year, somewhere between $112 all the way up to $130 a share, trading right around there. And so it's coming and hitting its head on that resistance. Certainly we'll see if this one can break up closer to the upper end of this uptrending channel. I'd say closer to $120, and you have your confirmation that this company has broken above this level of resistance. Now, the next stop, I think, for this naturally it would be closer to $123 to $125 a share. I think both from a consolidation and uptrending channel, I think that is your next natural level of resistance. Now, if you are looking to get into TSM, certainly I wouldn't chase the stock at these levels. I would expect a very natural pullback, maybe closer to sub $100. Certainly if it gets to $98, $99 a share, I think from a technical perspective, that honestly could be a great buy. You would still be in the context of higher highs and higher lows, and then would expect another reversal back to the higher end of this channel, closer to $120 a share. That is a pretty wide range, roughly 20%. But certainly coming in here and stepping in, maybe purchasing a few shares at $100 a share, certainly wouldn't be the worst call in my opinion. Now, the other thing that could happen with TSM is we kind of break above this and channel within these two red lines. Basically, we're at the level we were back in January of 2021. So for 3 years, this company really hasn't seen too many gains. It saw that big decline and then has seen a recovery. But again, for 3 years, you're basically at the same price you were. And so I wouldn't be surprised if TSM does come in here and again, continue to consolidate within this range. I wouldn't be dying to pick up shares at this level, although the results were pretty good, not great. I think the guidance is really what was great, but the results for this fourth quarter that just finished, that was, I think, okay. It's really the guidance which has the stock rallying, and I think that guidance is a fair reason to be upbeat about the stock. Now, the other thing I think that's left out with TSM, at least on the bullish side, is the geopolitical risk. Certainly you have a level of China risk over at TSM, and in my opinion, that is one of the biggest risks to the stock and makes it kind of hard to even step in at very great technical and fundamental levels, is you have all this China risk and geopolitical risk basically at all times. And with the US elections coming on later this year, certainly you have a specific personality who can certainly be elected back into the office, and he can have some level of influence as to what happens with China and Taiwan relations. And so I think you have geopolitical risk. Certainly, I think you can account for that when you come in here and look to pick up shares of Taiwan. Maybe you could discount shares by 10 or 20%, depending on really how you see those geopolitical risks. I think at a certain point, those risk factors outweigh the reward if the stock maybe declines in a substantial way. I think the other thing you could come in here and do is look to pick up other semiconductor names that are maybe more US focused, that do see a benefit from strong semiconductor demand, like a Skyworks Solution, which rallied close to 3.5% today, Applied Materials, which rallied nearly 4.5% today, and then you have companies like an AMD, like an NVIDIA, which again are continuing to see strong demand due to their AI chips. And so while I do like TSM, I don't love it at this technical point. I certainly don't love it from a geopolitical risk standpoint. I do certainly like the fundamentals. I do like the growth prospects, and I absolutely love the outlook. I think this is a better story for the semiconductor industry as a whole than it really is for TSM on its own. If you do look to pick up shares in TSM, you have to consider that geopolitical risk and then kind of factor that into your purchasing price. That was my take on Taiwan Semiconductor Manufacturing Company, otherwise known as TSM. Let me know your thoughts on this company in the comment section below. Also, let me know your thoughts on the semiconductor space, whether you think an NVIDIA, an AMD, maybe a Skyworks Solutions or an Applied Materials would be a better play in this sector. We have earnings season really ramping up next week with the start of tech earnings. Be sure to stay tuned on the channel as we'll cover as many of them as we can. Hit that subscribe and bell notification button. As always, thanks so much for watching, and I'll catch you guys in the next video.